What's up, Squares? Harold Perkins here, and today I'm joined by my friend and real estate agent, Amy Lyons of Keller Williams Realty East Valley.
Thanks for having me.
Amy's joining me today because we're going to talk about how buyers can best take advantage of the current conditions in today's real estate market. She's been a professional realtor here in Arizona for nearly 25 years, and I can't think of anybody better to talk to on this topic. Amy, we've definitely seen a shift in favor of buyers during the past few months. What are some of the ways a buyer can take advantage of this?
Yes, we've definitely seen a change in the market. In the past few months, the biggest change has been with our inventory. If we go back to April, this past spring, we were running at about 2 weeks supply. That means if no more homes came on the market, it would only take us about 2 weeks to sell the properties that we had on the market. Currently, right now, we're talking in September of 2022, we're running at about a 3-month supply. So that's a pretty dramatic change in a short amount of time. So what that means is that sellers are feeling the pressure to entice buyers to their home and away from their competition. And one of the ways that they're doing that is through price reductions. We were seeing over the spring about 500 price reductions every week. And now we're seeing about 3,500 homes dropping their price every week.
So if you're a buyer, then obviously lower sales price is better than higher sales price for the same house. And for every $10,000 difference in loan amount, there's about a $50 per month difference in the payment. So not bad, but what if I want a little more bang for my buck? What's another thing that I could do with $10,000 if I found a seller that's willing to give up the money?
That's a great question. But as you said, $50 a month on the monthly payment change isn't really that much to a buyer. But what the buyer could do is start asking for seller incentives. One of the things that a seller might be willing to do is pay the buyer's closing costs, or more specifically, apply a set amount of money. In your example, $10,000 could be applied towards reducing the buyer's interest rate. What does that do to the buyer's monthly payment?
Now we're talking. So the math of things is that interest rate is far more impactful to the monthly payment than loan amount. Yeah, that's right. Using that money to buy your rate down by 1% will save you $200 a month in the payment. 4 times more savings for the same amount of cost, and you've got the lower interest rate and savings for the life of the loan. And it's all paid by the seller.
Okay, so that's a great option. So the seller can either reduce their price by $10,000 or they can apply $10,000 towards the buyer's closing costs, which buys them a lower interest rate. But what about this 2-1 buy down that we keep hearing about? How does that affect the buyer's interest rate?
For the 2-1 buy down, you get a 2% lower interest rate for the first year in your loan, and then in the second year, you get a 1% lower interest rate. After the second year, your interest rate goes back to normal, and all of this is paid by the seller. That's awesome. Let's do one more. Amy, is there another way we can use seller concession to benefit the buyer?
Great question. Absolutely. So yes, a seller can contribute towards all sorts of things on behalf of the buyer. Their closing costs we've talked about, their interest rate reduction, but they can also help them prepay their mortgage insurance. Mortgage insurance is charged anytime a buyer is putting less than 20% down on a loan, and it often remains on that loan for many years to come. So if we can get a seller to prepay that in advance, then it saves the buyer hundreds of dollars monthly and thousands over the life of their loan. Harold, what does that look like?
Yes. So paying the PMI for a buyer is a great idea. So let's say we have a buyer that's putting 3% down on a $500,000 house. The PMI would be $234 per month, and you could end up paying that for up to 11 years. That's nearly $30,000. But did you know that MI companies give a discount if you pay all of the MI upfront at the closing? Yeah, that's right. Depending on your credit score, you could pay as little as 1.5% of the loan amount, and that pays your PMI forever. So on a $500,000 house, that's about $7,500, and you never have PMI as part of your monthly payment. And it's all paid by the seller. So if you're a first-time home buyer or you don't have the 20% down payment, this is a fantastic way to make the monthly payment more affordable.
So all of these are great opportunities for a buyer to utilize sellers' funds when sellers are being negotiable. This wasn't the case over the last 2 years when sellers didn't have to be negotiable because there were so many offers coming in on their homes.
Michael, you haven't even heard.
Never accept their first offer. What is your second offer? $12,000. Are you kidding me?
Nowadays, buyers can utilize these sellers' funds to help them prepay their closing costs, their mortgage insurance, or buy their interest rate down. These are all great tools for buyers these days.
Amy, thank you for spending time with me today to talk about how to help buyers in our shifted market. If buyers have questions for you, how do they reach you?
Yes, they can reach me at movingthevalley.com, or my direct phone number is 480-444-2280. Thanks, Harold.
And you can ask me questions in the comments or message me on any of my socials. I'll write you back right away. Also, if you found this information helpful, or if you know anyone else that's looking to purchase a home, please make sure to hit the like button so more people can see videos like this too. Later, nerds.